You are listening to Blockchain Asia podcast hosted by Coco Key. She brings to you illuminating and inspiring thought leaders from Asia's blockchain and crypto ecosystem. This is the go-to show to understand Asia's impact on the innovation and uncover market opportunities. If you like the show, subscribe to it and tell your friends. Also subscribe to newsletter Blockchain Asia at Substack to stay informed.
Hi everyone, welcome to another episode of Blockchain Asia podcast. I'm your host, Coco. Today I'm joined by Han Liu, founder and CEO of Allocate Capital, Malaysia's first and so far the only licensed digital asset fund manager. Our conversation will take us through Han's personal journey, discuss his vision, learn about the uniqueness of Malaysia as a crypto market and its role in Islamic finance world. To get more content in your inbox, subscribe to my free newsletter, blockchainasia.substack.com. Our conversation is intended for educational and informational purposes only and does not constitute investment advice. The speaker's views and opinions are their own. Han, thank you for joining me today to talk about your company, Allocate Capital. And I also want to tap into your knowledge about the crypto market in Malaysia and Southeast Asia in general. Just let's dive in. And to set the stage, please tell the audience about yourself first.
Thanks, Coco, for getting in touch. Hello, everyone listening to the podcast. I'm Han. I'm the CEO and founder of Allocate Capital, based out of Malaysia. Allocate is Malaysia's first and still only licensed fund manager, licensed in Malaysia, authorized to invest in digital assets. We call crypto digital assets here in Malaysia. For some reason, nobody wants to use the term crypto. And when I say fund manager, you kind of get what I mean. We run mutual funds, we run managed accounts, private accounts. In Malaysia, we call it private mandates. Investing in all kinds of assets, not just digital assets, but in terms of being able to and authorized by the regulator to invest in digital assets, we're the first and still only one. As a digital asset fund manager, we lean very heavily on technology, right? I myself, I've been a fintech entrepreneur for the last kind of 12, 13 years. But, and Allocate, while it's only a couple of years old, like we've injected a lot of kind of fintech elements. It's not just any old fund manager, right? We've got, a digital presence, digital back office, digital pretty much everything. So it's not just digital assets, right? It's digital everything. So yeah, that's kind of Allocate Capital in a nutshell.
How did you get into crypto? How about talking a little bit of your background?
I'm Malaysian, born and bred, and I spent, my university years as well as the first few years of my working life based out of London, in the city specifically. So I'm trained in finance, mathematics, statistics. So when you do that in London, you generally lean towards a job in so-called the city, which is, the financial capital. And so I worked there before, during, and after the financial crisis. So that's 15 to 17 years ago, and learned a lot about capital markets, how things work in finance, how to make a lot of money, basically, as a young up-and-coming investment banker. That was all the craze back then, or the wave back then. Got a little bit tired of all that stuff. Two reasons. One, the crisis did come, but what was interesting is that some of the stuff that my team were doing were so complex that when those structures started unraveling, right, they needed to keep a lot of us on to kind of fix the problem. So you cause a problem and then you get paid, and sometimes get paid even more money to fix the problem. There was a little bit of cognitive dissonance there. Am I really doing something that's positive for society with my skills? So that was one. And second reason why I decided to leave that was, I wanted to build something for my own. So that's, called the entrepreneur bug. My father is a small-time entrepreneur and business owner. So that's kind of got me into the game quite early. And in the last kind of 12 or 13 years, I've been doing fintech businesses in Malaysia. My first fintech business was a Web2 business. It was basically a Malaysian version of Bankrate or Nerd Wallet for you, the Malaysian version of Money Supermarket. So you get the picture, which is, digital distribution of credit products with financial education, a bit of that financial literacy thrown in, helping people, make decisions on their mortgage, their credit card, their insurance policy, stuff like that. So Web2 for about 10 years. The business was called Ringgit Plus. And naturally, as a fintech founder, back then there wasn't even the term fintech, right? Like in the 2010s, Like nobody was using this term. Like we were just a small internet business in financial services. That is the big long name. Eventually, like there came a name for this kind of business, I think in kind of the 2013, 14, 15. And we started being called a fintech business. So I was like, cool, I guess I'm a fintech entrepreneur. As a fintech entrepreneur, you hear about blockchain, crypto fairly early on, at least ahead of most of the populace. And initially you think, oh, okay, it's just a new way for people to make money. But as you go and study it a little bit more, you realize that that's just what some people use it for, but that's not what it is, right? And so I got big into crypto late 2019, early 2020. I guess similar to quite a lot of us during COVID, when you're not doing much, you're at home, you're looking for something to do. You get into something digital a little bit more. Caught the crypto bug in kind of 2020. When I exited my last fintech business, looking around, think about what to do next. We're like, okay, there's clearly a little gap here in crypto in Malaysia. Why? Because we do have crypto exchanges, but they're highly geared for kind of retail trading and digital app-based retail trading, and almost no institutional coverage, or we call it institutional supply, but literally nobody covering a more institutional or sophisticated audience, right? And we believe that for crypto to really make an impact in people's lives, you really do need like the big institutions, not just supportive, but involved, right? Not just saying, hey, look, that looks interesting, we'll do some R&D, but actually put some dollars and cents into it. So that is essentially the genesis of Halogen. Our idea was, in Asia, and in Malaysia is no different, investment products are largely distributed by what we call feet on street or agency forces. They are sold, and the structures in which are sold are typically something called unit trusts. In America, I believe you guys call them mutual funds. But over here, the common term is unit trusts, trust structures which are unitized. And we assessed that there was a significant market need for this kind of structures. But the main difference is that it has cryptocurrencies inside, right? Rather than the usual equities and bonds. So that's kind of, in short, my life story until today. So the last couple of years has been like setting up the business and launching the funds and getting them distributed.
So this is quite a journey. After you graduated from LSE, you got into investment banking, and then you just didn't think that was something you wanted to do, and you started a fintech company called the Regit Plus, correct?
That's
Which
right.
is more like you said, a supermarket of different financial products for retail investors. And then you exit that, and in 2020 you just learned about crypto, and you decided you wanted to do something to offer kind of like a US mutual fund of crypto to target institutional investors. Did I sum up correctly?
Yeah, pretty much.
Okay. And so for a quick follow-up question, because usually it takes people a lot of time, the learning curve of crypto is quite steep. So how did you quickly get into crypto, and then you got it so quickly?
I think it's two things. One, I benefited slightly from being adjacent to the industry because, I was in fintech, I was in digital financial markets, and the old business at Ringgit Plus. We even had a digital wealth advisory business. So naturally you start hearing about new asset classes and stuff like that. So I had an early view into that. I think what struck me the most was that there was significant retail investor adoption in Malaysia. I think we can talk about that a little more. We saw a significant amount of retail investors getting involved in crypto, and almost not a single corporate or institutional or high net worth investor doing it, right? And for me, that's kind of like a bit of a light bulb moment, right? Which is, hey, the people with the most capital have almost zero exposure to this. But clearly it's something that investors want, desire either to trade or to invest in. So there's clearly some sort of market dislocation or massive chasm gap in the market here, right? Where given the investment characteristics of this asset class, what's holding institution, even a very sophisticated institution or a very high net worth investor, what's holding them back, right? And there were a few things holding them back, right? And the number one thing was that there was no participants, there's no one offering that product for them. And then the next question is, what is that product actually for them? And one of the things that institutions and high net worths typically want is not just safety and security in the asset class itself, but safety and security of the asset class. Essentially, a lot of investors at those levels, they're quite comfortable with things like market risk and volatility. And these are stuff that they study or they're used to. What they typically were not so happy with the asset class previously was the governance risk, right? And counterparty risk and the basic legal risk of not actually having a segregated structure for investments if I were to get into crypto. In the region, there was almost no market participant offering these products, right? My learning curve was a bit accelerated because I was sort of adjacent to the industry. But also it helps that my previous business, we were also regulated by the central bank and the Securities Commission. So you do get a sense of where the regulations are and where there is real opportunity is, right? And that really helps you accelerate.
A follow-up question about that. So you mentioned before your company, there was no product or services for institutional investors, and you gave some explanation. Can you boil down to the exact reason why there is no such a product offered to institution?
Yeah, a couple of reasons, right? There's, I guess, two big reasons. The number one, I guess, most obvious one is that in Malaysia prior to 2019, the regulations on crypto were unclear. And 2019 sounds like a long while ago, but it's only been 5 years. Let me explain what happened in 2019 first, which is in 2019, both the central bank and our version of Securities Commission Malaysia, decided that, hey, we need some clarity. We need some regulatory clarity on this asset class. What is it? Is it a security? Is it a commodity? Is it a currency? And in 2019, it was kind of decided, at least locally here, that digital assets, including crypto, tokens, etc., will be regulated as security, investment contracts, investment assets, right? And rightly or wrongly, I'd say clarity is good. And from 2019, there's been clarity, right? And up to 2019, there's absolutely no way a single institutional or sophisticated investor would invest in an asset at scale or in any significant amount without that regulatory clarity. And since 2019, it's only been 4 or 5 years, right? It takes time for institutions to come on board, to create business plans, to execute those business plans. I like to think we just executed faster.
That's amazing that your regulators decided that crypto belong to securities, and it's okay for all the investors in your country to accept that definition and characterization. No matter what, it provides clarity to everybody in the market. And I think that's very important. It's different from the US. We are still debating whether crypto is security or commodity or something else. Now I understand why from 2019, when your central bank and Malaysia's SEC provided a clarity for the regulation, and that is encouraging for investors to step in, especially institutions. You guys were the first to make the move and to file application to launch this mutual fund product. And how long did it take you to get the license?
We were a little lucky, I guess, because myself and my co-founders, we are a known entity to the regulators because, we've been in fintech for the last kind of 10, 12, 13 years. So like we've had dealings with them anyway. So when we say, hey, look, this is what we're going to do, you know who we are. It took us about 18 months from the stage where we say, hey, we don't have a business, we have an idea, like we want to submit for an application for a business. Get, this is my business plan, this is my kind of risk management policies, my AML, TCFD stuff. About 18 months from then to getting issued a license, which I'm told is faster than average. I felt it being a bit slow, a bit labored being a fintech guy myself, but I'm told that under 2 years is pretty good.
That's very good. 18 months. You are offering a mutual fund of crypto. I also noticed that your fund is called Shariah-compliant. So tell me a little about that.
For those who don't really know about Islamic finance, what is Sharia compliance? Basically, Sharia compliance is everything about Islamic finance. And the best way for me to describe Sharia compliance, like a Sharia compliant security, the best analogy I can use is ESG. So there is some sort of frame of thinking around how do I determine whether I can invest in a security or not. In the ESG world, it's all about the environment, it's about social justice, it's about whether you're good governance. In Sharia compliance, and this is for Muslim investors, there's that same ethical component, right? And then obviously the lens of ethicality is different. The lens of what makes things ethical and not is seen from a Muslim investor's perspective. So there are two big ways to look at it. So the first big way is, there are core elements of Islamic finance or Sharia compliance that you must avoid as a Muslim investor. There are three core things: riba, garar, and masir. Three concepts. I'll translate. Number one, riba is interest. Muslim investors, cannot really do things with interest. Riba is interest. The second thing is garar, which is uncertainty, which is, I don't know what I'm investing in. I don't know what the outcome will be, right? You must have some sort of certainty in the outcome, or at least the process. And third is masir, which is gambling, right? Which sounds similar to uncertainty, but it's not. It's slightly different. So the three key core tenets. So there's one part, right, which is the core. I think every Islamic finance scholar globally, right, regardless of jurisdiction, will agree on these three things, right? Whether you're in Malaysia, which is probably one of the largest Islamic finance hubs in the world. I mean, Malaysia leads in Islamic bond or sukuk issuances globally, right? I think last year we were a third of all global issuances. We were the first to do an Islamic bond in the 90s, and we still remain kind of a global leader there. So whether you're sitting here in Malaysia or in the Middle East or in Nigeria or Indonesia, all scholars will agree on those things, the three key concepts or things to avoid: interest, uncertainty, and gambling, right? So you can imagine what that means. Okay, so you can't invest in MGM, you can't invest in casinos, you can't invest in gambling websites, that kind of stuff. Yeah, if you're in Islamic equity, right? And if you're an Islamic fixed income investor, then bonds are less favored, right? You want to make sure you invest in sukuks, which are based on profit sharing agreements rather than interest bearing agreements. And for crypto, similar concepts get taken over. So that's one part of Islamic finance or Sharia compliance. So similar to ESG, there's some sort of filtering, and filtering based on concepts rather than specifics. Then when you get down to the specific countries, then each country generally has some sort of scholarly body. I don't know how it works in the US with ESG, whether there's like a central ESG determinant person or each company has to do their own ESG assessments. But in a country like Malaysia, we have the securities regulator, which has a sub body called, usually comes something called like a Sharia advisory board, where they meet frequently and deliberate on Islamic securities and like how do I treat them, what should be filtered out. So for example, if there was a religious fatwa or a resolution that smoking is not permitted for Muslims, then the Securities Advisory Board will then come up with like their own fatwa or as a resolution that says, hey, look, in that case, then companies which invest in smoking, cigarette companies, will not be deemed as Sharia compliant. So there's like a separate, beyond the core three things, there's also like each individual country has their own determinants of what is permissible for Muslim investors. So I don't know if that gives you a good nutshell of when I say something is Sharia compliant, what does that mean? And the reason why I bring it up, because we're Halation Capital, we're based in Malaysia. We can run regular funds, regular mutual funds, but a lot of our flagship funds are Sharia compliant funds, right? So it's permissible for a Muslim investor worldwide to invest in.
That's very helpful. Does that mean that this fund is only open to Muslim, or non-Muslim can also invest through your fund?
In that regard, very similar to ESG. Just because I'm not an ESG investor does not mean I cannot invest in ESG assets. You don't have to be an ESG investor to invest in a solar company, for example. So similar concepts. We have Muslim and non-Muslim investors in our fund. So there's no distinction there. It's just a case of, look, if you're a Muslim investor and you're concerned about your religious responsibilities when it comes to investing, like we have products which are compliant with your beliefs.
If you are going to distribute your product to other Muslim countries, you will have to tweak to be compliant based on each country's requirement.
In practice, yes. Theoretically, we in Malaysia are quite advanced or quite deep in terms of our Shariah-compliant investing frameworks, right? And quite a lot of countries look to Malaysia for, okay, like I want to create a Shariah-compliant investing framework or Islamic finance framework. Which country do I look at? Which country has the deepest market of Islamic finance products? Most countries will answer that, hey, look, like actually Malaysia is the place to look for in terms of, okay, what do they do there? Maybe we can bring some of the elements to our country where we're a little behind Malaysia in terms of the development of Islamic finance. We're actually quite a big Islamic finance leader for all the reasons I said earlier. So there is some benefits of going out of Malaysia as a manufacturer of Islamic finance products. Yeah, that's kind of a little advantage on our side. We may have to tweak depending on the specific jurisdiction, but like I said, the large core elements are mostly the same. And as long as you stick with those core elements, I think it becomes a much easier thing.
I saw that you offer Bitcoin, Ethereum, and fixed income in your fund, correct?
The best way to think of us is like a Islamic Asian version of Grayscale, right? We have the Sharia Bitcoin Fund, which is a trust which is unitized and available for investors to buy units in the trust, and the trust buys Bitcoin, right? So that's kind of how that works. We also have the Ethereum version of that with staking. We are staking Ethereum in there. So you get the Ethereum returns, but you also get, the staking rewards built into the trust. We also have been approved last month for a multi-coin fund. So we're calling it the Crypto Titans Fund. The name Titans gives you a sense of what that is. Yes, large cap, multi-coin, actively managed. So the first two were passive, right? So you buy some Bitcoin, you hold it, or you buy some Ethereum, you stake it, you just keep it there. The third one, we try to give investors exposure to the crypto asset class, quote unquote, not just a single or two coins, a number somewhere between 8 to 12, to give people a more diversified exposure to currencies for investors who don't want to choose a coin. Like I know Bitcoin is the biggest, I'll probably have some of that, but if I'm interested in not just Bitcoin, I want crypto as a whole. Do you have something? And we have something, right? It's called the Sharia Crypto Titans Fund. As a fully fledged fund manager here in Malaysia, we also have fiat funds. So we have a local currency fund like the Ringgit Income Fund, similar money market like in its returns. We're about to do one in a US dollar version as well, likely to be Shariah compliant. That's a special for a global audience. Okay, I want US dollars. Sorry, I don't really like your local currency because I'm not Malaysian, but I need something which is Shariah compliant. We will have something which is Shariah compliant in US dollars. A fiat fund is doing that. So we have a few things which should be able to cater for most investors' needs who are in this space.
For that part, the fiat one that you allow people to use dollar, does that mean that for the crypto funds, you only accept local currencies? And but for foreigners, if they want to invest in your crypto, do they have to put money in your fiat fund first and then move into your crypto?
It's a good question. You can come in with fiat direct into the crypto funds, no problem. You can come in with fiat into the fiat fund and you can switch. So that allows people a bit of flexibility. Hey, look, like let's say I have my relationship with you, Halogen, and you've got to give me enough stuff, right? I cannot be just with you for one product, right? Like if I'm just with you for a Bitcoin fund, if maybe I'm rebalancing out of the Bitcoin into kind of a more stable asset, don't you have that asset? Give me that asset, right? And not just give me the asset, give me an easy way for me to go in and out if I need to, right? And we do allow a fund switching, so you can go like, hey, look, I'm over allocated into Bitcoin today. I need to pare my allocation down, but I don't want to withdraw from Halogen because I may want to go back in later, and it's just a hassle for me to do that. As I mentioned at the start, we're highly digital. We have a web app where you can just click of a button, you switch your funds around. So yeah, that's kind of how that works.
When you said it's very tech driven, that means you support, for example, mobile app, everything backend is fintech type.
Exactly. The joke we have internally is like, yeah, the business is in Web3, but actually our business is very much Web2. And what I mean by that is our back office is all the usual stacks like JavaScript, SQL, CSS. The website where the web app is hosted is all the same thing. I don't use Web3 technologies for consumer facing. The Web3 happens in the back office, which is, okay, how do we make sure that there's sufficient integrations to do two things? One, ensure smooth operation. So we're transferring digital assets one wallet to another. We're transferring to an exchange to then buy and sell. And it just make sure it's well contained within our systems rather than, in disparate systems all over the place. Make sure that our back office is able to integrate. And those integrations are microservices, APIs, Web2 stuff. The second part of being Web2 is that a lot of people assume this is purely for customer service and lean operations. But actually, if you're running digital asset businesses, or if you are running a digital asset based business, you absolutely need this because it's not just customer service, it's actually added security. The more things are controlled in that way, then there's less potential for hacks and scams. You asked me just now, how come you end up being the first? We're not the only fund manager in Malaysia. There are about 100, right? Licensed fund managers in Malaysia. Not a single one of them do direct access to crypto, despite it being 5 years since the ruling. And part of the reason for that is that technology is a big contributing factor. And a lot of legacy fund management companies just don't have the technology to be able to safely manage crypto. It's not just custody, it's safe management. How do I make sure that I have the right access controls, the right tech employees to digital asset security, custody risk? It's not just about clear regulations, about capability as well.
So since your fund's launch, what kind of feedback or questions that your prospects ask the most, or what their concerns are?
Honestly, the first and still only fund manager doing this, we get a lot of inbound retail demand. They like the fact that we're licensed. There are registered exempt crypto exchanges in Malaysia. We can talk about that more later, but we're the only licensed entity which can give investors exposure to crypto. So, retail investors hear that headline and then they go, okay, cool. I want to find out more about you. Then they go, hey, look, what's the difference between you and going to an exchange? And then we have to explain to them a couple of reasons. One, we're a fund manager, so you're actually investing in a mutual fund. And that has pros and cons for all the maxis out there, like the investors don't hold their keys. But sometimes maybe it's better that they don't until they're ready to. The pros, for example, are that they don't have to hold their keys, which is a risk in itself. And they get something which they're familiar with. And a lot of the governance risks I mentioned around non-segregation of funds with an exchange, those don't exist with us as a fund manager. It's just a standard practice. Segregated trust, segregated from me. Anything happens to the fund manager, the trust remains. The trustee will just appoint a new one. That's the things that we have to explain. Hey, look, I know exchanges were the primary/only way to get access to crypto for the last 10 years or so, but that need not be the case, right? We were quite fortunate the last 3-4 months when the US ETFs got launched, and a lot of the education also went away because people are like, oh, okay, you're just like an ETF, it's not traded, yes, but you can subscribe and redeem with us directly. I understand the concept. So that became a bit easier. The second bit that is the reason why we exist, which is we're trying to get investors to stop speculating in crypto, but start allocating into crypto. Because if you've got a basic level of investment training, whether it's a CFP or CFA or simple, finance training, and you do the numbers on crypto within a basket of securities, you realize, tremendous Sharpe, Sortino, Tiva metrics, amazing metrics across the board for your portfolio. It's just a portfolio enhancer. And I think the BlackRock and Fidelities have helped with this the last 3 months, but it's been a challenge for us the last year and a half, trying to educate investors that, hey, look, I know you think of crypto as something to speculate on and gamble on, but if you're a seasoned investor, if you believe in the theory of investing, diversification, rebalancing, asset allocation, you'd be silly not to allocate a little bit of your portfolio to crypto, because having 1 to 5% or 10% really adds a lot of benefits to a portfolio. And even for a conservative investor, you need to consider that. If you ask me, that's been the biggest feedback, which is people still think of crypto as a speculative, make quick money with this. But actually, the best way to win in crypto is to allocate, not speculate.
How about institutional investors? What is their feedback and reaction to your fund?
They are extremely positive. What I mean by that is, finally, we have something that we can do, because historically, an institutional investor, as I mentioned before, can't go into a crypto exchange and open up a crypto wallet, because that's just totally not in line with how their internal policies and governance structures work. Who's going to hold the keys? Is it the CIO? That's just not how they do things. Furthermore, obviously, it will fail due diligence on the first go, because a crypto exchange doesn't have segregated assets. It's just a big commingled bunch alongside the exchange. It's basically 100% counterparty risk there. They're very pleased to hear that all these basic things in traditional finance are finally at the table for crypto. Then it's a case of, hey, look, you guys are only a year and a half old. You guys have the track record. So matter of time then. A few of the hungrier/earlier institutionals are already on board with us, right? We've got several of the top investment banks and securities houses with us at the moment. But obviously the bigger guys, the sovereign wealth funds here, the pension funds, need basic things like, hey, do you guys have 3-year track record? Okay. I'm like, okay, we're the first and only, and we're a year and a half in. So I'll call you in about a year and a half, and we'll be the only ones who have that track record at that point.
That's totally the situation for a lot of funds. So that means smaller institutional investors, they are happy to try out, but bigger ones they want to see more track record. And also you are still educating the retail investors to help them understand you offer something different from speculation, but just asset allocation and management. So far, is this something beyond your expectation or below your expectation?
Okay, difficult to answer. Okay, first I'll caveat, right? Like, as a fintech entrepreneur, you're obviously used to seeing numbers going up and to the right very quickly. I'm seeing it going up and to the right and fairly quickly. But I mean, compared to a digital Web2 business, the pace is a bit different. I think we could go faster. Maybe that's just me, hustling fintech founder mentality. But then when I speak to outsiders, to people in this industry, and I tell them we got our license in 18 months, and in the last 12 months, we've scaled to almost 100 million AUM. They go, what? How did you do that? I'm like, that doesn't sound very impressive to me, but okay, I guess it's impressive to you guys. So for me, maybe I need to measure our growth on a different yardstick. For me, that's just a case of expecting more always. But when you take a step back, you go like, okay, we've done some awesome stuff and we've grown quite awesomely. So let's not be too hard on ourselves.
Did I hear 100 million AUM?
Not quite there yet, but almost. Yeah,
that's good.
Yeah.
That's good. That's wonderful. Is it local currency or dollar? Local currency. That's very impressive already to me. Congratulations, you're getting there. How about the ETF that Hong Kong is going to offer? Will people in Malaysia be interested in investing in the ETFs in Hong Kong? Because I think US is way too far away for them. But Hong Kong ETF, spot ETF of Bitcoin and Ethereum, would that be interesting to people in your country?
Yeah, I think so. I think actually we do have securities houses which give access to US equities. There are not that many, obviously, in Malaysia, but there are many investors who have access to US ETFs already, US stocks. Likewise in Hong Kong. So I'd say no big difference. I guess the proximity is a bit closer to home. Good for investors, that's great. Actually, what that gives us a bit more excitement is that with the Asia-based ETFs going live, it gives confidence for Malaysia's own developments. We do have a local stock exchange, which has ETFs on it. So then it gives us some confidence. We're actually the only fund manager who can actually do something like this in Malaysia. And Hong Kong is already doing it. Dear local stock exchange, let's start talking and do something different, which is there are no Shariah-compliant crypto ETF, and there can be. And the place to find it could be in the local exchange here in Malaysia. Long story short, if you don't let me list here my funds as ETFs, then I might go to New York and list the Islamic Bitcoin ETF, which is something different. Shariah-compliant investor may desire.
That's actually a very good idea.
You mentioned Hashkey. We're excited to see how that launches. I guess next week, April 30th. Yeah.
Let's talk about the Malaysia market in general, because you touched on the Malaysia market here and there. How is the market from your perspective? Is it a very active market, or are people receptive to crypto idea? Or earlier you mentioned that people don't like to use crypto. Or maybe it's because it's too speculative. So just tell me, because I don't have too much idea about Malaysia.
I'll give you, sure. I mean, we'll take a step back first to talk about Malaysia. We're a medium-sized country, 34 million people. So 34 puts you literally like the middle country of the world. In terms of capital market, we're the second largest in Southeast Asia behind Singapore. So Singapore, everyone knows as the the capital market hub of Southeast Asia. And that is true. Malaysia is not that far behind. I would say second in terms of the breadth and depth of the capital market. So like stocks, bonds, and furthermore, we lead in Islamic finance globally. So that's kind of exciting. And crypto is not that much different with the extra bit of spice, right? What I mean by that is we have a fairly active retail investor market here. Over 1 million have crypto accounts. So 3%, 4% of population. This compares to kind of 4 million people with stock trading accounts, about a quarter of stock trading accounts, 4 million in Malaysia, crypto accounts, probably over 1 million, at least locally. Yeah, as in it's been around for years. So people are quite familiar with, the act of trading and speculating on coins. We have about a handful of local exchanges. But what's an extra kind of nice flavor is that I saw the last stat in 2022. Up to 2022, we were a top 10 country in terms of Bitcoin mining. That immediately gives you a sense why. Number one, our energy is cheap. Coal, gas, and hydropower average cost of electricity is low here in Malaysia. So that kind of lends itself to crypto adoption, right? Low energy costs, developing market with not the freest in terms of currency control. Well, you can move currency in and out, okay. It's just not the freest. And if you're a developing country with a semi-free currency market plus low energy costs, that's all the ingredients which are ripe for crypto. That's why Malaysia is big for crypto. So that's kind of gives you a sense of the market.
One thing that surprised me is about the mining. I did not expect that Malaysia is so high up on the mining side.
Yeah, huge. I haven't seen the latest numbers in the last 6 months. Obviously, haven't seen the numbers since the halving, but as recently as 2022 or early 2023, we were 7th or 8th in the world in terms of hash power.
From what you said, it's legal to trade cryptocurrency in Malaysia. And for any of the crypto exchanges, it is okay to launch a business there. Is it required to have license before you launch and operate in Malaysia?
And we have a framework specifically for crypto exchanges called a market operator registration. So you don't get a license because it's not a licensed activity in terms of trading crypto or running an exchange that allows people to trade crypto. Fund management is a licensed activity, so it's within the capital markets license. But the running exchange, which allows for crypto trading, is not currently specified. So what they've done, the regulators said, hey, look, like I'll give you a little sandbox and we'll call it, registered market operator or market participant. And you can come and get a registration. And if you're registered, we'll allow you to operate. And the registration is a typically easier process because you don't have a full license with the full requirements. It can be 6 to 12 months, get registered, start operating.
That sounds very easy. And I saw that even Binance is active there. Bybit, Binance, OKX, they're active in your country.
They're not registered. They are active. They're not registered. In theory, they shouldn't be doing what they're doing. But in practice, as long as they don't outwardly, because I mean, in the digital world, you can't really stop people from logging onto a website, right? It's a global website. You can't stop me from logging onto Facebook, right? But you don't get a lot of the regulatory protections if something goes wrong with those exchanges. Whereas if you use a local registered exchange, you might get some regulatory cover. You might get some restitution, some recourse, legal action capable. Most of the large exchanges open their websites to Malaysian investors, and Malaysians are generally quite resourceful to find these things.
Is there anything unique about Malaysia compared with other Southeast Asian countries? Just one thing.
The one thing, and the government knows this too, and they're pushing it actively, is that we lead in Islamic finance. And it's a growing market worldwide. It's growing 5 times faster than traditional finance. Something unique when someone thinks about Malaysia is world respected. Pretty much Shariah-compliant investing, Islamic finance, our biggest finance export, I think, if you ask me.
I understand that you need to leave in about a minute or so. I just want to ask you, how can the audience find you on social media?
We're on X, we're on Facebook, we're on LinkedIn, Halogen Capital, or if you want to follow me directly and see my thoughts, I tweet a lot on finance for Malaysia. I'm at OOIHANN, Uihan.
Great. I would look forward to seeing your product listed in the US in a very near future.
You've given me the idea, which is if the local stock exchange won't list our ETF here, we just go straight to US with the unique product, Islamic finance,
Exactly.
Islamic Bitcoin ETF.
Exactly. Really enjoyed our conversation.
Thanks. Hope to see you soon. See you again soon.
Yes, and keep in touch.